Hi, everybody, and welcome to the weekly market wrap for June 9th, 2017. We're actually really busy this week. We had a lot of movement in the stocks on our focus list, and we actually were able to trim three winners this week. And let's get right into it here. So, we took a winner off called G3 Apparel, trades on the NASDAQ under the symbol GII. And excuse me, three I, so it's GIII. And this company we added at $24.34 a share, and we wound up taking it off right around 25.84. So not a huge winner, okay? Put it on around here, take it off up here. We're able to lock in about 6.16% on that company. I'm just a little more anxious to take some winners off here and keep my risk a little more managed than I'm normally doing because of the big run that we've had and because of the tech weakness that we've seen today. So I'll get into that in a little bit, but that was just one company. GIII was the company that we took off. And we're also removing a company called Lakeland Financial. LKFN. This company we added at $44.03 a while back, so right about this level here. And now we're able to take it off right around 47. That was also a 6.29% winner. So once again, not a huge home run, but a nice little winner that we could put in our pocketbooks and move on. Um, the third one is the one that you heard me talk about a lot. We actually are removing Tesla from the focus list. TSLA is a ticker symbol, and what you're looking at here is a weekly chart of this company. We added Tesla at $263.87 on March 23rd. That was when we actually have seen Elon Musk purchased about $25 million worth of the stock, and we were able to lock in a total profit. We got in, let me get my little pen out here. We got in right at that level essentially, and we're able to get out here. So we took all this profit out of it. It actually came out to be a profit of 35.41%. And that's not bad in a couple of months. So I'm pretty happy about that one. TSLA, we're removing for a 35% profit. So then what we've done is we took a look at what the insiders were doing, and we were going to add a company that a lot of you have obviously heard of before, Intel Corporation, NASDAQ symbol INTC. Now, the CFO of Intel, Robert Swan, had actually purchased shares of the stock. He purchased about $500,000 worth of the stock, 504,000 to be exact, at $31. Excuse me, sorry, $36.31 on June 5th. So recently he stepped in and bought these shares, okay? And what you're looking at here is a weekly chart. So what wound up happening was I looked at his track record, and he purchased his stock right around this level here, and we have the stock price closing down at 35.68. So we're actually able to get it cheaper than where the CFO bought it for himself. So that's not a bad thing. Secondly, the last time that Mr. Swan bought shares of a chip company was when he bought shares of Applied Materials back in 2011. He actually wound up paying for Applied Materials at the time $10.98. So he made his purchase right around here. And obviously, within a couple of years, the stock went up tremendously, a little bit of a downswing, and then back up again. He's still holding it on the record, and he's up 334%. So he's got a great track record. He knows when it's a good time to buy, and the fact that he's buying a company like Intel is pretty interesting. And just to go back to Intel real quick, I don't know if you recognize this, but we added it at 35.68. Our projected target is 40, but we're not putting a tremendous amount of risk on. Okay, we're at $34.65, only about a buck risk, not too much on the downside. Like I said earlier, I want to keep my risk limited here. I know I'm not one to call tops or say that we're too high or anything like that, but I just want to make sure that we're in a great position so that if the market does pull back, we could turn around and look and say, hey, we did take plenty of great winners and we protected our downside. So that's what I'm trying to do. Secondly, What's making me a little bit uneasy is that the S&P 500 looks really good. I mean, it's nice little rally this week. Okay, we're looking at the daily. So this week, believe it or not, we actually closed lower by a little bit here. And the one thing that happened today, for apparently no reason, is the tech sector got beat up for about 2%. So this day, this big red candlestick that you see here is literally a 2% move. And that's not normal. Okay. It doesn't mean that it can't have a little correction and then start to go back to all-time highs again. I'm not saying it won't. I'm just saying it's not something that we're accustomed to. So these little red candlesticks have happened one, two, and this would be the third time. It's a little bit bigger than the others over the course of the last 2 or 3 months. So it's not 100% unusual, but it's not the normal case of business as usual, go up 0.2% and move on to the next day. So I just want to tread water, not looking to be too aggressive on the heels of this big sell-off in tech, and lock in some profits and move on. And if we could continue to add companies that are showing us they have strength because insiders are buying them, that's terrific. We'll continue to do that, except we will keep our stops a little bit tighter, and we'll try and make money that way. So to kind of sum up everything today, it was a great week for us. Three winners, two 6% winners, and one 35% winner. We added a bellwether on a down day called Intel because of a successful CFO purchase. And I just hope that I can continue to add value to what you're doing when it comes to investing. So hope you have a great weekend. I appreciate you guys checking in, and I'll talk with you next week. Thanks.